Bottom of the page 130, coordination with social insurance and workers' compensation benefits. Okay, this brings up a good point. Now, what this is saying is in this paragraph is, there are 3 different programs that you could have the same exact coverage under. If I become disabled on the job, where's that covered? Workers' comp. If I become disabled and I'm eligible, I could possibly receive disability income coverage under Social Security. So there's number 2. Plus, if I have a disability income policy sold by a private insurance company, I could have coverage there. There's number 3. So what are we going to do? Under our policy sold by the private insurance companies, we want to prevent duplicate coverage. So here's what the insurance companies will do. Top of page 131. They will add these riders, such as, number 1, the additional monthly payment rider. This rider will pay the insured while they are waiting to see if they are eligible for Social Security benefits. As we'll learn, the Social Security has a 5-month waiting period. So if they add this to the policy, their policy would pay them during this 5-month waiting period. Number 2, Social Security rider. 2 different variations of this. The first one listed called the all or nothing rider will do just what it says. If Social Security provides coverage, your policy will pay nothing. If they don't, then it will pay in full. Better version of it would be B, the offset rider, because as we'll learn, Social Security disability income benefits are definitely nowhere close to a full return of your lost wages if you become disabled. So this, if you have the offset rider, states your policy will still cover you. It'll just pay the difference between what you were making before your disability and what Social Security is paying you in disability income benefits. And then we have the number 3, social insurance supplement rider. This states that your coverage may be combined with workers' compensation benefits even as well. And then we have the next heading in center of page 131, at work benefits. Okay, so here's the situation. We've been totally disabled. Maybe it was a temporary disability, and we're starting to go back to work. Or maybe it was a temporary disability from the start where we could work part-time but not full-time. Well, while we're at work, if we're not working full-time, we still need benefits to make up that difference, don't we? Well, there's 2 different definitions for at-work benefits, and they work one of these 2 ways. Number 1, partial disability. If you have this partial disability definition for your at-work benefits, it states if you're working at all, your benefits in your policy will be reduced by 50%, cut right in half. More common, you see number 2, residual disability definition for at-work benefits states, you go back to work, we will residualize your benefits tied to how much you're going back to work. So you go back to work 1 week out of the month, we'll reduce your benefits by 25%, okay, to make up that difference. So residual definition of at-work benefits. Bottom of page 131, other provisions affecting income benefits. Number 1, cost of living adjustment. This is an inflation rider. So obviously you're going to be primarily worried about the cost of living. Okay? As your bills increase over a period of time as you're disabled, well, you might want your benefits to do so as well. So if you add this as a rider, it will do just that. If you don't add it though, the amount you receive from your policy will be fixed. Okay? If you pay $500 a month, it's going to be $500 a month. If it's a lifetime payout benefit period, then it'll be that way for the next 30 years or however long you live. Okay? So if you're worried about the inflation risk, you can add that as a rider. Top of page 132, number 2, future increase option. This maybe you have a test question on. This is similar to the guaranteed insurability rider we learned about back in life insurance, but future increase option you would add to a person who's young would allow them to purchase additional disability income policies in the future regardless of health. So if somebody's just starting out in the workforce in the future, they're hoping that their wages are going to increase, obviously. So they could add this as a rider to their policy and purchase additional coverage in the future based on their age and not their health. And then 3, relations of earnings to insurance. This is really built in the policy to protect the insurance company. We talked about this in the last section, but if you have multiple policies and you have a claim, it states each policy will share proportionately in your loss. You can't profit from your insurance and so on and so forth. Then we have other cash benefits. So other riders you could add to the policy. Number 1, accidental death and dismemberment, AD&D. You can add that as a rider to any policy. Covers 2 things, accidental death or dismemberment. We have the principal and the capital sum. Principal sum pays out if you die. Capital sum pays out if you become dismembered. We have number 2, rehabilitation benefit. Pays a lump sum in your policy for vocational rehabilitation. And number 3, medical reimbursement benefit rider, sometimes referred to as the non-disabling injury rider. So if you become injured, doesn't end up to be a disability income claim, but this will pay for medical expenses related to that. So an additional supplementary coverage you can add as a rider to your policy. We have refund provision in the next paragraph. We're also known as a return of premium rider. This basically will state, if you buy this, and it would be very expensive, but it would return the premium you paid into your policy to you after a certain period of time, minus any claims that you've had. So it would state 5 years down the road, we'll return the premiums you paid to us minus any claims if you've had in the policy. That's refund provision or return of premium rider. Exclusions, same exclusions we're going to see in most all or impairment riders, same things that we'll see in most all the health insurance policies. Losses resulting from war, military service, attempted suicide, overseas residence, aviation, certain circumstances, losses that occur while committing a felony. So those are pretty standard exclusions in most health insurance policies. Bottom of page 132, unique aspects of individual disability underwriting. Occupational, we have number 1, non-occupational, and number 2, occupational coverage. Okay, if I have workers' compensation, which way will my policy be written? Occupational or non-occupational? Answer is, bottom of page 132, number 1, non-occupational, because I have workers' comp on the job. So if I have workers' comp on the job, I don't need duplicate coverage. I only need coverage off the job. So they write my policy as non-occupational coverage, and in turn, my job would not be a rating factor for the premium I pay. Don't have workers' comp. How do they write my policy? Occupational coverage. Coverage on and off the job. Okay, so we talked in detail about that stuff earlier. Top of page 133, second paragraph. Keep in mind, these policies might have a probationary period up to 12 months where I'm on probation for any pre-existing disability that I may have. Reoccurs, not going to be covered if it happens during the probationary period. Third paragraph down, they talk about elimination period, waiting period. Remember, that was a number of days. Sometimes they refer to it as a time deductible, because that's really what it is. Certain number of days I had to wait until I become eligible for benefits. Oh, what else do we have here? I mentioned malingering again right in the center of the page we talked about, but that's, remember I said a lot of times they'll limit the coverage amounts that you receive in your policy because they're trying to prevent malingering and you from profiting from the loss. Next paragraph below that, it says, remember, disability income insurance policies will pay you the policy limit or your net earned income, whichever the two is less. If you purchase two different policies that both covered your total loss of net earned income, your benefits would be coordinated. So we talked about that earlier, buying $50,000 of coverage from coverage A and $50,000 from coverage B. If our wages are $50,000, they will share it proportionately. Bottom of page 133, group disability income insurance. Now, we have short-term disability and we have long-term disability coverage. Long-term is going to be anything longer than 2 years in a benefit period. Short-term will be anything shorter than 2 years. Most group policies provide short-term disability coverage. Yeah, we go on to the next page there on 134, top of the page. Short-term disability coverage. Coverage period shorter than 2 years. Generally has shorter waiting or elimination periods. Could be as short as 1 week or 7 days. Second paragraph. If you have group disability income coverage, it's always going to be written as non-occupational. Because remember, generally, in order for an employer to be required to purchase workers' comp, they have to have at least one employee. And in order to form a group, in most cases, there's got to be a minimum of 2 employees for insurance purposes. So if I'm covered in a group plan, that means there's at least 2 employees. That means my employer has to have workers' comp for us. And that means I've got on-the-job coverage under workers' comp. So under my group disability income policy, I have non-occupational or off-the-job coverage in the second paragraph there. Third paragraph, as I said, these benefits have to be paid at least monthly, on a monthly basis. Can be paid more frequently if they like. Now, 1, 2, 3, fourth paragraph down, it talks about taxes in the group policy. So we'll take a look, do an example of this on the board. I know a lot of people get confused here, but taxes in health insurance are very difficult. And chances are you probably have quite a few questions on them, so you really got to know them. And they're most confusing in group disability income. Okay, so we've got group disability income. First thing I'll mention is we insure our gross because benefits are taxable. Now back to individual though. When we talked about individual disability income, were benefits taxable? No. Remember, we insured our net because benefits from an individual disability income policy were not taxable. Well, here, group benefits are taxable, so we insure our gross. How are they taxable though? Well, it depends. Basically, it relates to how much in premium the employer pays. And so we'll say benefits over here. Okay, now the premium the employer pays for these benefits is tax deductible to the employer as a business expense. Whatever amount of the premium percentage-wise the employer pays, that amount of benefits percentage-wise are taxable to the employee. So if the employer pays 100% of benefits, 100% of premium, then 100% of benefits will be taxable to the employee. Now remember, the employer doesn't have to pay 100% of the premium. They can pay less. So let's say that the employer pays 80% of the premium. Therefore, 80% of the benefits would be taxable to the employee. So what I'm telling you here, whatever percent of the premium the employer pays for group disability income, that same percent of benefits the employee receives are taxable to the employee as income. So, well, if the employer is paying 80% of the premium, who's paying the other 20%? The employee. Can the employee deduct that part of the premium they're paying? No. They can't deduct the premium, that 20%. So that 20% of benefits over here is not taxable to them as income. All that's taxable is whatever percentage the employer paid of premiums, that percentage of benefits is taxable to the employee. So let's say this. Let's say that the employer paid, because they might possibly word it this way on the exam. Say the employer paid 75% of the premium for the group disability income policy, and the employee received $4,000 in benefits. What dollar amount of those benefits are taxable to the employee? 75%, right? What's 75% of $4,000? $3,000 would be taxable. Okay? Group disability income. We'll go over it again when we get to taxes at the very end of the health part here. But let me change it though, because remember, we're talking about disability income right now. Careful on the exam. If they change it and they say instead of disability income, they say group medical expense, which is pays doctors and hospital bills, and they say 75% of the premiums paid by the employer and $4,000 in benefits are paid out of the plan, how much of those benefits are taxable to the employee? Answer is 0. Medical expense plan benefits are never taxable to the employee at all. And keep in mind though, who are the benefits getting paid out to? Not the employee. Who are they going to? Doctors and hospitals. Okay? So you don't even see the money. So when we talk about taxable benefits, we're talking about group disability income, not medical expense. Okay? So we go back in the book on 134, 1, 2, 3, fourth paragraph down, it says whether disability income premiums are tax deductible and or benefits are taxable and to whom depends on who pays the premium. If the employer pays the premium, then it is a fringe benefit to you. Your employer can deduct the premiums paid as a business expense and the benefits paid are taxable to you. However, if you pay your own premium for either group or individual, the premium is not tax deductible since it is a personal expense. However, your benefits are not taxable either. Okay? So you've got to know those for the tax situations there. Then we get to business disability insurance, business uses of health insurance. We have key employee or partner disability income. So very similar to what we talked about in life insurance. The company has a key employee and they're worried about that key employee becoming disabled, and if they did, them being unable to work. So the company could buy a disability policy on that employee. If that employee became disabled, benefits get paid to the company to go out and hire a new employee to replace them while they are disabled. It's the same situation there. And we have the partner disability income insurance. Back to Ben and Jerry when we had our buy-sell agreements on life insurance. What if instead of Ben dying, he becomes disabled and can no longer work? Well, you could purchase partnership disability income, use the money to buy Ben out of the company since he no longer can work. Then we have business overhead expense insurance. Now, business overhead expense insurance is a unique policy, something we've never seen before, but this is a policy sold to small employers. And it covers things if the small employer becomes disabled. So say that it's like a sole proprietorship and I'm the only employee. And I'm worried if I become disabled, that how is my company going to continue? It's going to go broke. You know, how am I going to have any money to pay my expenses, rent in my office? I'm going to have to hire somebody else to come in and replace me. I'm going to have to continue to pay my expenses, aren't I? So I could purchase a business overhead expense policy. If the business owner becomes disabled, pays ongoing business expenses, payroll, rent, costs for inventory and supplies, does not pay the small business owner's loss of income. Okay, so make a note of that or highlight that if it's in that paragraph there. Does not pay the small business owner's loss of income. Last sentence there, tax-wise. Premiums are tax deductible and benefits are taxable for business overhead expense. And then we have disability buy-sell. Buy-sell agreement, just like we talked about, Ben and Jerry and life insurance, it's only they don't die, they become disabled. Okay, so it works here as well. Then we get to Social Security disability benefits. Okay, so we mentioned Social Security a little bit earlier in the section because we were talking about what's its importance. Well, the importance obviously is if we're eligible for it, we might have duplicate coverage in our policy sold by the private insurer. So we need to know a little bit about Social Security and the requirements in order to be eligible for disability income benefits. Now, first thing I'll mention about Social Security is this acronym is sometimes used for it. OASDHI. This is an acronym commonly used for Social Security, and it lays out all of the benefits under Social Security. So let's spell out this acronym. We have old age, which is retirement benefits. Survivors. We die. Our survivors, if they're eligible, can receive monthly payments. Disability income, which is what we're talking about right now. And health insurance, which we'll talk about later, but that's Medicare. So those are the four main parts of Social Security. We have old age, which is retirement benefits. We have survivor's benefits if we die. Disability income, which we're talking about right now if we can't work. And also we have health insurance, which would be Medicare. So part of Social Security, health insurance for people age 65 and older. So OASDHI, if they reference that, that's an acronym used for Social Security. Okay, so we talk about disability income here. Under Social Security, there are some requirements to receive these benefits. Now, first thing we'll mention is you have to be under age 65. Under age 65 in order to be eligible for disability income benefits. That's number one. Okay, number two, you have to be fully insured. And that means you have to have contributed to Social Security at least 40 quarters, which is 10 years. So you have to contribute to Social Security for at least 40 quarters to become fully insured and be eligible for total disability benefits. Now, how do you contribute to Social Security? It comes right out of your paycheck. There's a Social Security tax. So as you work, you accumulate these quarters, and at some point you become what's called fully insured. Now, keep in mind, the Social Security Administration will send you out a notice every year. I believe it's 3 months prior to your birthday, and it's a Social Security statement. And it says, you've contributed to Social Security for these various years. They have track of it, and they have track of how many earnings you were taxed, what dollar amount of your earnings you were taxed on. And it'll also tell you in there how many quarters you've contributed to Social Security, and if you're fully insured or not. Okay? So we have to have that first. Now, beyond that, we have a definition of total disability. Our definition is we cannot perform any job. Now, they call it any gainful work, but that's any job. We can't perform any job at all. That's the definition. Now, also, our disability has to be expected to last at least 12 months or end in our death. Okay? So it's a long-term, permanent disability. Has to be expected to last at least 12 months or end in our death. As we continue on there, we have a 5-month waiting period. Okay. So those are the main requirements under Social Security. Now, assuming I go through all these, and now on the exam you could have questions on any of these things, so you've got to know them. Now, say that I go through all these and I meet all the requirements and I'm eligible for benefits, and say that you do as well. And so we're at the Social Security Administration office there, we have questions and we're getting them answered, and we find out that we're both eligible for disability income benefits under Social Security. Are our benefit dollar amounts going to be exactly the same? Answer is no. They are based on what's called our primary insurance amount, which is in part based on the amount of earnings we were taxed on. So the higher your earnings, the higher the amount that you've contributed into Social Security, the higher your benefits will be up to a certain maximum limit. So everybody watching this video is going to have a different disability income benefit. But in that Social Security statement you receive every year, it'll tell you right in there. If you became disabled today, you would get, $100 per month or whatever, $1,000 per month, $500 per month. It depends. But it's not going to be a full return of your lost wages. Okay? It's not anywhere close, in fact. So also it'll tell you, it says the death benefit under Social Security somewhere around $250. Survivor's benefits, it'll tell you your wife would get this, children would get this amount for a certain period of time. Okay, it's all in that statement, so you might want to check it out next time you get it. This is what it all relates to here. So that's disability income benefits under Social Security. So we take a look at the book, bottom of page 134. Here's the important information. Second sentence in the last paragraph on the page. Total disability states that the disability must be expected to last at least 12 months or result in the death of the insured of the person, and it must prevent you from performing any gainful work. So there's the definition. Any job you have to be able to meet. Due to the mandatory 5-month waiting period, benefits to a disabled worker, if any, begin at the 6th full month of disability. Only workers under age 65 qualify for these disability benefits. True. Covered worker becomes qualified by attaining fully insured status by accumulating 40 quarters of coverage. The amount of benefits is equal to 100% of the individual's primary insurance amount, but may be reduced with other disability benefits. Next paragraph says, there's the acronym Old Age, Survivors, Disability, and Health Insurance. It's an acronym commonly used to define the benefits available under Social Security. Okay, so that's Social Security, and for the exam, that's the extent that we'll go to related to it. We have last paragraph on the page, workers' compensation is important again because there's disability income coverage under workers' compensation. Remember I said eligibility is determined by the state. Okay? Workers' compensation is required by an employer to provide this coverage for their employees. Now what type of insurance is workers' compensation? Casualty insurance. Yeah, occupational coverage, they say, covers you on the job only. And that'll be the end of that section there. So take a little break there, print off the next section, which is going to be medical expense plans. Read through that, and we'll go ahead and present that in the next video. So we'll see you when you're ready. I'll see you there at that next video.